Hey guys, welcome back. So we finished what I personally feel like was one of the longest months ever, and the way it affected the stock market pretty much probably took all of our portfolios on an insane roller coaster ride. And for me, it really reminded me on how powerful and how volatile the tech sector can actually be. First off, we started the year with CES 2025 and Jensen Huang of NVIDIA announcing a new AI chip giving an AI computing experience on people's desktops. He also mentioned self-driving cars and a software that can teach humanoid robots how to move and react to things. Then there were the interest rate concerns after ironically a positive jobs report, which of course hurt the market. What hurt the market even more was an announcement on AI chip exporting restrictions, which hurt NVIDIA and other chip and tech stocks. This on top of the news NVIDIA released about their chips overheating and glitching out didn't make it a lot better. But then we actually had some pretty positive news with the announcement of Project Stargate, a $500 billion project with the goal of making the US the AI powerhouse. This would affect companies like Microsoft, TSMC, and of course, NVIDIA. I was honestly definitely loving this news, especially with how it impacted my portfolio, of course, until DeepSeek about 5 days later. The fear of DeepSeek as a potential cheaper alternative to OpenAI messed up the market, inflicting the most pain on, of course, NVIDIA, which had not only its worst day in the market ever as a company, but the biggest market value loss in stock market history. So it's safe to say that my portfolio for sure had a lot going on for the month of January, and I want to talk about all that in this video, including how much I made or potentially lost, what stocks I bought, what stocks I sold, a little bit of how I did on dividends, and what my goals are for the year 2025. And let me know in the comments below how your portfolio did. I sincerely hope it did a lot better than mine. So since the year started, I'll start off with the year-to-date comparison, which of course wasn't great at all. I actually lost about $200, which was about 1.32% of my entire portfolio. But all time, I'm still looking at over $4,800 in unrealized profit, or about 43.5%. The losses, of course, came with the biggest hit, which was from the announcement of DeepSeek, where I think at that point my portfolio had lost at one point like $500 or a little over 3%. I think it was at 3% by the end of the day. And looking at the all-time, it kind of sucks because at one point last year, I had reached 50% unrealized profits, which basically meant out of all the money I had in my portfolio, half of it was profits that I had unrealized at that point in time. But being a long-term investor, I'm pretty confident I'm going to reach that milestone again and more in the future. And that all will happen as long as I'm investing into the right positions, which means I need to buy more into the right positions and sell what may not be working for me. All the sales I did last month had everything to do with what I really wasn't investing into anymore, starting with Bank of Nova Scotia. I ended up selling about 2 shares and made a little over $114. Now, although BNS had grown in share price over the past year, I personally have been investing into it for almost 5 years, so I lost money over that period of time. Also, in complete honesty, this is one of those positions that I was probably recommended to by another YouTuber when I was first starting to invest, and when I just heard dividends, I just invested into it. And since then, I really didn't take the time to see what Bank of Nova Scotia had going on to see if it was even worth me putting money into it for at least the purpose of decreasing my dollar cost average. Plus, I knew that with the money I was going to take out from selling that position, I can put it to better use. Also, with similar reasons, I sold my position in Smurfit Westrock, it was a little over a share at $58.93, and also TFI International, which was a little over a share and made me about $154.41. So again, these are positions that I felt like I had accomplished their goal, or I wasn't paying as much attention into and really hadn't paid attention to since I started investing into it, which is unfortunate. But I also knew that, especially with the negative impact of DeepSeek, there was a particular position I wanted to invest more into while the share price was lower. It actually took me until recently, when I was prepping for making this video, that I had only invested into one stock in January, and that was Broadcom. I'm pretty sure I invested over $400 at about 2.5 shares of Broadcom. This is a position that I really wanted to take advantage of their share price growth history over the past 5 and 10 years. They've been doing phenomenal. On top of that, the dividend growth history, when you look at the dividend CAGR for the past 3, 5, and 10 years, has been great. And immediately after the news of DeepSeek and the potential comparisons of OpenAI, this, along with a bunch of other companies, dropped their share price. I really wanted to take advantage of that discounted position. And plus, just like a lot of other people, I feel like Broadcom is going to play a significant role when it comes to AI, especially how they have their own semiconductor chips that are used for specific tasks. I think that's really going to isolate them from other semiconductor-based companies in the best way. So when it comes to dividends, in January, I made $28.21, which in comparison to January of last year, I believe was a little over 38% in profit, which was always great. My biggest check was QIOD. I think I made about $5.11. I'm also gonna start tracking how much each position of my portfolio pays me so I can have an idea of what pays me the most by the end of the year. Maybe not the most important thing, depends on how you really look at it, but something fun to keep in mind. And as far as keeping track of things, if you watch a lot of my videos, especially my dividend update videos, I talk a lot about how I like to take where I'm at now and compare it to where I was in the past and where I'll be at in the future, just as a motivational tactic for me, especially as someone that doesn't invest a lot into the stock market. So with that, I use trackyourdividend.com to get more of an idea of where my portfolio can be at in profits, and in this situation, dividends per year. And I create two scenarios. One, if I continue investing $30 a week, and the other one where if I stop. And both assume that I'm making 8% in profit, which was so far the average that I've made with the history of my portfolio. So with the first scenario, if I actually just stopped investing $30 a week with where my portfolio is right now, at the moment, my portfolio is built to pay me $375 per year in dividends, but in the next 5 years, I'd make $552 a year, 10 years, I'd make $826 a year, and in 15 years, I'd make $1,229 per year. Now just adding $1,560 per year or $30 per week, I would make $744 in the next 5 years, $1,292 in the next 10 years, which by the way, the 10-year mark is higher than the 15-year mark if I stopped investing $30 a week. And then in 15 years, I'd make $2,086 per year in dividends. That's $857 more than 15 years without investing $30 a week. So that small amount makes a huge impact in the long term. Speaking of the long term, my goal when it comes to 2025 is to have a portfolio where it allows me to be greedy while others are fearful. The past few weeks have really reminded me that despite the stock market having an overall grand history of constantly increasing, that it is filled with hills and valleys, and sometimes a lot of those valleys are super deep and super volatile. So I really want to make sure that the positions that I'm in are positions that I'm aware of, I get an idea of what they do, and I'm very comfortable with their history and how they're going to go in the long term based on how they've done in the past, so that I'm not freaked out as much when we have those scary moments. Whether it's what happened with the pandemic, which was insane, or a little bit less insane of what happened the past couple of weeks. So instead of being fearful, I have the mindset of taking advantage into discounted positions, kind of like buying something on discount on Black Friday. And hopefully that mindset allows me to continue to build a portfolio that will make me more money in the long term, whether it's overall profit or overall dividends. But again, January was a pretty good month in dividends, especially when you compare it to the Januaries of the past since I've been investing. And I'll talk more about it in this video where I go deeper into how I did when it comes to January, including what companies paid me, what my average is, how that compares to the past couple of years, and what my goals are when it comes to dividend investing specifically. So hopefully you guys get a chance to watch that video. I appreciate you guys watching this one. Until next time, as always, take care.